into some of the technicals now. Tony Sycamore from IG joins me. And if we kick it off with what we saw on the NASDAQ, I mean, it outperformed weakness in the broader share market on Wall Street overnight. What are we seeing there?
Yeah, Nvidia did well. It obviously was buoyed by reports yesterday that the H2 chip exports will resume to China after being halted in April, and that's cost the company billions of dollars. But looking aside from the tech sector, it was broadly a negative night, and that followed some mixed earnings results from the big banks. And also the expected rise in inflation led to an unexpected rise in yields, which I believe has unsettled markets. Now, when we look at that price action in the S&P overnight, it does really give you a bit of an overview on what happened there. New highs were made on selling, and we haven't seen that sort of enthusiastic selling for quite a while in the S&P. So after hitting that 6,300 mark for the first time, we see the S&P now eyeing some very important support coming in around 6,200 to 6,180. So if we go back to our Elliott wave framework, which I know you like, Jules, to me, we've completed 3 waves up of a possible 5 waves, and it's looking like we're about to get a wave 4 pullback, which would be confirmed on a break of support at 6,200 to 6,180 tonight.
5 waves makes me think of Paddington here in Sydney. What about our market? A record high yesterday, but it just can't seem to keep that momentum, can it?
Well, a record closing high. It fell 7 points short of its June 86.39 high. And after the weakness, which isn't portrayed in that chart that we've seen this morning, you do have the possibility of a double top forming in the ASX 200. Got so close, Jules, 7 points away, but here we are now trading around 85.50-ish. And I think if we break below the support from that yellow line coming in around 85.50 to 85.30-ish, it probably signifies, at least in the initial instance, we do have the potential double top in place. What that would suggest is that a pullback towards the 84.21 low is probably most likely. And if it was to break below there, then there's no reason why we can't see a pullback towards the 200-day moving average coming in around 82.50. And when you look at that rally from that 71.69 low, the fact that I'm calling, a pullback of around 400 points, it isn't a big deal in the grand scheme of things.
Yeah, absolutely. All right, let's have a look at what we've been seeing in oil. Traders reacting to a little bit of a lack of direction regarding what we're seeing with these Russian exports.
Yeah, the Russian tariff, the secondary tariffs on Russian exports has certainly played a part. Probably not quite as harsh as the market was expecting in this 50-day timeline. We've seen it before, 2 weeks, 2 months, etc. And you saw crude oil sell off yesterday, but also coming out in our time zone yesterday, the GDP data and housing price data in China wasn't particularly good. I know that GDP beat expectations, at least in Q2, but that was driven by stimulus and as Chinese companies rushed to beat those tariffs in the US. So there was a lot of front loading. Now, as these tailwinds of the front loading start to abate and the real tariff level now starts to kick in, we have, I think, more likelihood that we see China growth dipping to around 4.5% in the second half of this year. And that's not good for crude oil demand. So right here, right now, crude oil seems to be quite comfortable in a range between $64 and $74. But if it was to break below $64, then you have it back into that range where we spent a lot of time earlier this year.
All right, we had core inflation in the US overnight, of course, momentum in the greenback. What does that mean for the Aussie?
Yeah, look, this is one of those things with markets. You could probably look at the inflation report and say the core measure at 2.9% was better than expected. Some of the components show the impact of tariffs. We were expecting that. But what I'm seeing in the currency market is the US dollar has had a terrible start to the year, down about 10% the DXY, and it has broken above some quite important short-term resistance. This is the DXY I'm talking about, which suggests it can probably trade from around 98.50 to where it is now, potentially up to 100. It's only a 1.5-2% rally that I'm talking about after a 10% dip. In the context of the Aussie dollar, that would play out in terms of it pulling back towards the bottom of that flag, which you can see there, and the 200-day moving average coming in around 64 cents. So that to me is just part of this technical process which we go through. Markets get overbought, oversold, then they correct. That correction for the Aussie could come back to 64 cents.
Talking about overbought, oversold, is that the likely story for Bitcoin?
Look, the price action yesterday was phenomenal, and in fact in the week leading up to it. But that high, which you see there above 123,000, that had all the hallmarks of a short-term blow-off high. And then we had the pullback below $116,000 overnight. It has stabilized since, I would like to see Bitcoin just retrace back towards those record highs we saw earlier this year, around 112,000 before it starts the next leg higher. But certainly in the short term, it's had a great run. As you can see on the RSI there, Jules, it is in overbought territory. Just to pull back now to work off those overbought readings and to rebuild energy potentially for the next leg higher.